Hi, I'm attorney Bob Diamond, and in today's episode, I'm going to share with you what's probably a new opportunity in something called Overages, which I'm doing full-time, really great cash-generating business. I'm also going to share with you some tips on what's working today, given the current environment and given the foreclosures that we have and the interest rate changes, has created amazing opportunities for you as a real estate investor to get into deals with a lot less cash without taking out loans and doing what works today.
Welcome to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owners Association, where real estate investors have found success since 1968. I'm your host, Brian Hamrick from Hamrick Investment Group. This episode is sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB & Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com. Hello and welcome to episode 520. Negotiation, deal structure, and avoiding costly legal pitfalls. These are the areas where investors can win big or lose everything. My guest today is Bob Diamond, a real estate attorney, investor, and developer who's been featured on Fox, NBC, CNBC, NPR, and even TLC's Flip That House. Bob has written 3 books on investing, hosted a long-running real estate radio show, and personally negotiated more than $100 million in real estate transactions. With over 20 years in the business, he brings a rare combination of legal expertise and hands-on investing experience. And today, he's going to share how strategies like overages, foreclosures, and creative deal structures can help you build wealth. Bob, welcome to the show.
Thanks, Brian. Great to be here. And kudos to you for over 500 episodes. That is awesome.
Yeah, so well, thank you. We're both in show business because it sounds like you've got quite a career on TV and even TLC's Flip That House, which maybe we can talk about that at some point.
Yeah, we had some fun stories I could tell you about that filming.
Yeah, well, tell us about
in the grass.
Yeah, tell us about yourself. I mean, what you have a very interesting background, and I'd love to know a little bit more about you before we get into some of the things that, the experiences you're about to share with us.
So I would say for me, I'm really entrepreneur at heart. I started my first business at 14, which is just a little business, cutting wood into cords of wood and selling it and clearing out part of my backyard, which was great. To today where I, own a bunch of investment real estate and have a pretty big team doing the overages business and have an education business. And, business has always interested me. And I think what distinguishes me from most other attorneys, a lot of attorneys find excuses as to why your thing won't work. And my thought and my question I always ask myself is, how can I make this work for a client or for myself? And I think so often the questions you ask are so much more important than anything else because the answers become apparent if you ask the right question. And the right question for your attorney is, how can I make this work? Because I can always find 10 reasons you can't do something, but that doesn't move you forward in life, does it?
Yeah, well, no, yeah. How you ask the question is everything. So tell us, what are some of the questions that have been asked of you or that you've asked that have led to some real creative deal structures?
Well, just for example, in the overages business, which I'll give you a 30-second thumbnail.
Yeah, that's something we haven't talked about before. So give us the 101 on that, please.
The very short executive summary. When a property is sold at a foreclosure auction, might be from taxes because you didn't pay your real estate taxes, or from mortgage because you didn't pay your mortgage. You have a mortgage foreclosure or a trustee sale, which is the same thing. When the property sells, if it sells for more than the debt that's owed, then that extra money is available for the former owner. And that concept often blows people's minds because wait a minute. They sold your property, meaning they could be the sheriff at a sheriff's sale or the taxing authority in a tax sale. They sold your property, so don't they keep the money? And the legal answer is yes, they keep the money up to the amount that they're owed. So if you owed 3 years worth of taxes, they get 3 years worth of taxes plus their costs. But the former owner gets the rest because that really represents equity. And you can think of it like on a settlement sheet. You have the gross sales price. You deduct, the realtor's commissions, any transfer tax, any debt that's due, like a mortgage, any judgments, unpaid water, that kind of stuff. But the money that's left over, of course, belongs to the former owner. And really, a foreclosure sale is no different. Anything that's left over belongs to the former owner. So what we do as a business is we reach out to those former owners, tell them the good news, there's some money available. That always blows their mind. They're like, what? How could I? Is this the Prince of Nigeria calling me? And of course it's not. So we made a business out of that. And we have a lot of entrepreneurs that did. But that's the synopsis of it. In one of those deals, I had one where it was a commercial property that had gone to foreclosure. There was a whole bunch of money left over, hundreds of thousands of dollars left over. But there was a $300,000 mortgage lien that would be entitled to claim, lay claim to its $300,000. But I was looking at this, I'm like, I know there's a way to make some money out of this. So I reached out to the creditor, meaning the mortgage company, who had no idea what had happened. Even they didn't know you could get any money. And I swung a deal with them to get their money, meaning do like the collections work for a percentage. Now, the collections work was just applying for the funds, which is just an administrative process, not even legal, very easy. Anybody could do it. But they didn't know. And I said, look, I'll get you this $300,000 and I charge a percentage for doing that. And so I got a percentage of that money. And it was a win-win. The mortgage company got money they never would have ever gotten because they didn't know about it. And, I got paid for bringing value, which is really alerting them that there was this $300,000. And, our fee is anywhere, like any normal contingent fee work, 30 to 40%, which is a typical fee. And so when you're talking about $300,000, that really adds up. And that was a 30% deal. And the interesting thing about the business is really anybody can do it, meaning anyone who learns how to do it, learns how to get the list of these monies that are left over, and they can then go and apply for it, obviously working with the owner. And the best thing about the business, quite honestly, is not, oh, I make all these boodles of money. That's wonderful. I like making money in business. That's great. But what's really great is you typically have former property owners who are losing everything. They literally lose like the roof over their head. And I'm bringing them back, tens of thousands, occasionally hundreds of thousands of dollars that they didn't know existed, never would have gotten, and it helps them get restarted in life. And to me, it's like, don't we all really want to provide value and help people and make money? Like, that's the ideal business. So I really like that. The other thing I like about it, and I think it pairs up well with real estate investing, at least it has for me, is this is a cash business where you're not investing money. Like, I'm not buying the lien. I'm not taking out a mortgage or borrowing any money. Instead, I'm providing a service. I get paid great money for it. And then I could take that money and invest it in real estate, which is a space I know well, and do really well. And, if there's one thing I know, Brian, it's that free and clear properties really cash flow. And so you can get to free and clear properties much, much faster. And you can even do things like put 30, 40, 50% down without a stress. And those cash flow faster too. It's like you get that cash flow and you can use it to pay down the debt. Because I think, honestly, for most people, if you had a dozen or so free and clear rental properties, even if they were just like run-of-the-mill houses, I think most people will be financially independent, meaning they can pay all their bills from their cash flow and their properties, and then they have a platform to do, world-changing things. If they want to enter private jet land, they could do that, working at it. If they just want to take it easy and spend time with their family and doing things they love, they can do that. And I think that to me is the most meaningful part about it.
Yeah. So there's a lot there, but I want to talk about overages for a second, and I want to make sure I'm tracking what you're saying. So what I'm hearing from you is that when it comes to foreclosures, and this could be any type of foreclosure, tax lien, mortgage foreclosure, utility foreclosure, whatever.
Yes.
And in every state, I mean, is this like all 50 states?
There are a couple of states, like your home state of Michigan, that they're a crafty bunch of buggers. So there are a couple of states you can't do it. Michigan, it's impractical. California, it's impractical. Colorado and Illinois, all those states, it's impractical. Everywhere else you can do it. What Michigan did, which is fascinating. So Michigan for years would sell the property, and under state law, they just kept all the spare change, like kept all the money. And a couple of years ago, in a case called Tyler versus Hennepin County, I don't know where Hennepin County is, you probably do, but Tyler versus Hennepin County. Oh, you know what? I think I'm Minnesota and Michigan I'm putting together, but they're both the same deal. What they did is they said you have to you have to let them know in advance that if there's excess funds, meaning an overage, that you want the money. And nobody's going to do that. Like you have to send a certified mail.
The previous owner has to let the person who's foreclosing on them know in advance that they want the overages.
Yeah, it's just silly. So we don't do it in those states because it's just a bunch of silliness. We do it in the other states.
But you could be preemptive in Michigan, because I'm in Michigan. So you could be preemptive. And if you're aware, if you're going through a foreclosure process and you're aware that those overages are available to you, you could be preemptive and send that letter.
Yes.
And would that secure your interest?
And you'd be fine. And
wow.
I sometimes I feel like I'm on like a cause against the government. And it's not that I don't hate the government or anything. I think that sometimes there are well-intentioned things that don't work out. Like their story is like, we're doing it for the children. We take this money, we give it to schools and parks. It's like, great. But you got some person that's dead flat broke. And the reason I know that, if you can't keep the roof over your head, like you can't pay your mortgage or can't pay your taxes to keep your house, you are at a financial low in your life. And those are the last people we should be like picking clean of every cent of equity they have. I think everybody could agree on that. Like, that's not the person you want to strip away like all the excess equity or extra dollars that came from the sale of their house and just take it. That's not right. Like they can't afford it. And like, I don't care if you're independent, if you're very conservative, very liberal. I think we could all agree that that's not the person you should strip clean, because the government gets their money. Like in tax sale, they absolutely get every penny plus the cost of sale, plus interest, plus penalties, all that. Same thing with mortgage foreclosure. When that happens, mortgage company gets paid in full. They get all their costs, penalties, interest, and all that. So the extra money that's left over truly represents equity in the house. And I don't think a penalty for someone who just runs into hard times and can't pay their debts should be, oh, you as a penalty lose all your equity. That's not right. I think that's just wrongheaded. So I'm sort of leading a charge to fix that. Meaning people, like yourself, if you're interested, anybody else can participate in this. And just give you an idea of volume, there are approximately 3,000 tax sales completed a day, meaning Monday through Friday, so 5 days a week. So that's like 15,000 completed tax sales a week, and around 2,400 mortgage foreclosures. That varies between 1,800 and 2,500, depending on how the economy is doing. But, again, we're talking just round figures, 10,000 of those a week. And most of them have, if it's an improved property, meaning it has a piece of like house or something on it, it's going to have equity. And the reason for that, you'd know this, if you look back, say over the past 6 or 7 years, housing values have pretty much doubled everywhere. And it's just, if you think back 6 or 7 years ago, average house in America was a little over $200,000. Today, average house in America, a little over $400,000. And, lots of reasons for it, but I'm just more reporting the news. That's just the fact. And if you think, I'm sure in your real estate career, think of what you could buy a house for 6 or 7 years ago versus today. Or in a flip, what you could resell a house for. And the reason that's important in overages is that often the debt is old, meaning they got a mortgage in 2006, and now they've run into hard times, they're behind. Well, the house in 2006 wasn't even worth half what it's worth today. So there's a huge equity cushion. So when it sells and people go to a foreclosure auction and pay, 60, 70, 80% of as is value, a lot of money left over. And lots of people that need that help.
I'd like to take a moment to tell you about Green Property Management. Not only do they manage everything from single-family homes to apartment complexes in the West Michigan area, they also manage my entire portfolio. So I can tell you from personal experience that their unique flat fee management style is worth a closer look. If you feel that your property isn't operating to its fullest potential, then Green Property Management can help you take a holistic approach that will save you money, eliminate your headaches, and increase your net income. And if you're a property manager interested in applying Green Property Management's model, give them a call at 1-866-95-GREEN or visit them on the web at greenpropertymgt.com. If you're thinking of leaving your W-2 job and becoming a full-time real estate investor, one of the greatest costs you must consider is healthcare for you and your family. When I made this transition myself, I found the whole healthcare insurance process to be confusing and frustrating. That's why I'm glad I met Chad Creasy at RCB and Associates. Chad is a professional health insurance agent who helps real estate investors and small business owners understand and choose their best healthcare options. And best of all, his services are covered by the insurance company and won't cost you a dime. If you live in Michigan and are expecting a change in your healthcare insurance coverage for any reason, or losing employer coverage or transitioning into Medicare, then you owe it to yourself to contact Chad Creasy at rcbassociatesllc.com. This is your world, the kind of this overages foreclosure world. What are some other creative ways of approaching the foreclosure world?
Great question.
Yeah, I'd love to hear more. I mean, the overage is something new to me, but I'd love to know more about.
Here's an ideal one for all your folks out there. So where you're holding foreclosure auctions, there's always the opportunity to catch up on the mortgage before the sale happens and then keep the property, right? That's called redeeming. But essentially, it just in layman's terms, it just means you catch up on the penalties, the interest, the costs, and then you can keep the property. So a great investor strategy to save cash is to talk to people that are in foreclosure, see if they are ready to sell. And usually just before the sale, they're ready to sell. Like when the executioner is right then and there, that's when they're ready to go. And instead of getting yourself a mortgage or short-term financing like hard money loan or something like that, you just reinstate the existing loan. Meaning you get what's called a reinstatement figure. That's as easy as asking whoever's handling the foreclosure, whether it's an attorney in a judicial foreclosure state or the trustee in a non-judicial state. Ask them, hey, what do we need to come up with to reinstate the mortgage? They'll give you a statement. You give them that money, and then you keep the property. And a great strategy for investors is to then take ownership of the house, which is accomplished by getting a deed to the property and keeping it with the existing financing in place. And when you do that, you could be taking on a mortgage that might be a 3% mortgage, 2.5% mortgage, because we all know that until fairly recently, mortgages were much lower interest rates, right? From probably, 2008, 9, 10, somewhere in there. My memory isn't that perfect, but we've had historically low interest rates. So you can take over a property with very low interest rates. And I can also tell you that, yes, is it technically going to violate the terms of the loan agreement? Most cases, yeah, because you're taking over that property, meaning taking ownership, and you're supposed to pay off the mortgage. But number one, that's certainly not a crime. I can tell you that as an attorney, it's certainly not a crime. And number two, if that comes up, you can always refinance or sell the property. You have plenty of time to do it, but it doesn't come up. I can just tell you that. The benefits to you as an investor are that you don't have to come up with all the cash. Like if someone who's in foreclosure, 5 days before the sale, they're finally like, all right, I give up. I can't do anything with this. I got to do something. So then you would say, all right, I'll take over this property. I'll reinstate this mortgage, and I'll get the mortgage set right, which is going to help their credit, by the way. It'll very much help it. And then you're going to make payments of the mortgage either over a long term or more likely shorter term, if it's a fix and flip. So maybe 6, 7, 8 months from now, you're paying the thing off completely. That does a couple things. Number one, it reduces your cash that's needed. Number two, there are no personal guarantees, which is really nice. And number three, you're truly helping the person because their credit's going to be much better rather than a completed foreclosure. If you have, yes, they had terribly late payments, but then the loan was paid off. That is a far better spot for them to be in and helps them to get on their feet again. And you could do creative things with that. You can do something where you're giving them some money to help them get into a new apartment. You could do something on the back end where you're giving them some money when the property sells. It really opens up the world, but the big benefit is it preserves your cash. And secondly, it keeps you from making personal guarantees, both of which are big, big deals because I have been in real estate for a very long time. And in, I would say 2008 through 2011, all that I did was loan restructuring on behalf of clients. I mean, I was bailing people out right and left, trying to restructure, negotiate deeds in lieu of foreclosure, negotiate reinstatements. And I saw a lot of investors get hurt because of personal guarantees. But if you have no personal guarantees, limits your damage. And that's very important.
Well, what what are the creative techniques you're having to come up with now? Here it is, mid-September of 2025. Yeah, I'm not sure which way we're headed. If we're going to see more distress in
I think
commercial world.
I think more distress, especially as you mentioned, commercial. I mean, I own shared office space. It is a disaster. I have like 40% vacancy that I just can't seem to fill. So, at 40% vacancy, the property doesn't cash flow because it's, you have operating expenses, insurance, utilities, et cetera. And so I'm repositioning the property, meaning I'm changing the use from shared office space to residential. And, we all know, like, even if you are a casual observer of the news, there's a shortage of housing units, meaning for people to live in. And there's an excess of office space. So when you see that, you just say, all right, given this property, what could I do with it? And if you see a space that lends itself to becoming condominiums or apartments, that's a great use for most properties because we're short of housing units and we're excess on office. And there are a lot of office owners that are in deep, deep trouble, meaning they owe more than the property is worth. It's not cash flowing and they can't keep it. And so you're going to see a couple things going on. One, fire sales of properties from owners because they just can't deal with it. You're going to see short sales, meaning it's being sold and the bank is taking a little bit less. You're also going to see a lot of foreclosure opportunities where the property has been foreclosed. It's now an REO, which stands for real estate owned. It's bank owned property. They're not operators of property. They want to get rid of them. And some of the creative things you can do there is negotiate for built-in financing. They're happy often to turn a bad situation into a performing loan. And it's repriced at today's market. And today's market in some places has dropped by more than half. Like if a property that used to be $2 million, now it's one. Used to be $1 million, now it's 500,000. Used to be 500, now it's 250. And of course, some bigger ones, it used to be 100 million, now it's 50. That's what's happening in the market. And I think that's very much a local play, meaning I think it's for someone who says, in my little neck of the woods, I see some of these opportunities and I see these empty office buildings and empty space. And I think I can put the work in and effort to reposition it and find a new, higher and better use for it. Great opportunity and opportunity for creative financing because the stakeholders, meaning the owner, is just like giving up, is just shoveling money into this thing. The lenders know that it's not working. If you have a fatigued or borrower without a lot of extra money, it's not going to work out. And that's when people put on their creative hats. And so I think wonderful opportunities in that.
Yeah. So what you're saying is negotiate with the the company that actually has the loan, so that if you buy the property at a discount, they'll still finance it and include that as part of the package.
Yes, exactly. And you're negotiating with parties. One is a seller that just wants out from under this pain because they're having to either devote money to it every month, which is dreadful, especially when your portfolio is performing, it's dreadful. And they just want out from under it. So it's not price, it's about escaping, this alligator that's chewing them up. And working with the lenders who really are not prepared for huge numbers of defaults. Lenders, when they put their portfolios together, they're assuming very low numbers of defaults. So then want to do deals. And one sort of insider baseball thing on this, your best lender is a local lender that sort of creates and services and probably mostly owns its own loan portfolio. These are local business banks. You'll know them because they advertise in local markets like, hey, we're the business bank for, Duluth, Minnesota. They're talking, to the market that way. Usually they're smaller, 5, 6, 7 branches, something like that. They're not the big multinationals. It's not like Chase, JP Morgan Chase is not, they don't care. They're just these giant megaliths. But the local lenders, great people to do business with. And if you build the relationships with them, meaning like you take a loan off their hands or you get it performing again, they'll be calling you. Hey, we've got a problem loan. Would you be interested in looking at this? And when you get to that position, the world is your oyster.
How do you get those relationships with the bank where you're the one they call when they have these distress situations?
You start off by having a deal to bring and talk to them about, meaning you're going to do it from the borrower side. So you're going to establish contact with borrowers who you may see on an upcoming foreclosure list, for example. You see them as being advertised for a foreclosure sale. You may pick them up on notice of default if you're in a deed of trust state. And then you start working with the owner. And that's when you work directly with the lender to see, what they're willing to do. Are they willing to let you assume the loan? Are they willing to take a discounted payoff? And when you have that in, you can negotiate hard, and you should negotiate hard because people respect that. But you should work to have a relationship with lender, meaning when that deal is put together, go down and have a breakfast with the banker or have a lunch with the banker and make sure that you're doing everything that you say you're going to do. So if you say, I'm going to call you Tuesday at noon, you should be calling them. And if you say you're going to follow up with something and follow through, you do that. And then you can put yourself in a position, as long as you perform and do your part, where when they have a problem loan, they'll be reaching out to you. Because remember, a lender is in the business of lending and collecting interest and making a spread. They're not in the interest of managing real estate, repositioning properties. That's not their business. And they just as soon not be distracted with it. And so they're not looking to keep these properties. They're not looking to keep a non-performing loan. They're looking to get them resolved. And if you're seen as a competent operator that can do that, you'll get the calls from the bankers. And your step is, step one, work with the borrower. Step two, negotiate hard and do everything you say you're going to do, and then maintain that relationship with the banker. You may be having breakfast with one of the bankers, 2 or 3 times a year. Could be going to a ball game with them. Just getting to know them, because they need you as much as you need them. And that's a surprising fact for a lot of real estate entrepreneurs, that they need you too.
That's good advice. Good advice. I wanted to, before we wrap it up, your lifestyle is a creative sort of real estate strategy, because you live in Puerto Rico. And before the show, you were telling me like some of the benefits of living there. Do you mind sharing that with our audience?
Sure, happily. So So Puerto Rico has become a magnet for entrepreneurs of all different kinds, because they put together a tax program to attract people back to the island. And there's a view here that they want to become like the next Singapore, which is a hub of industry and entrepreneurship. And to do that, when you move to Puerto Rico, you don't owe any federal taxes. That's just under a law called the Jones Act. You don't owe any federal taxes. Also, Puerto Rico gave you a tax break so you have a 4% tax rate instead of a normal federal rate, which is somewhere between 28 and 38%, depending. And there's no state income tax. So, you take your tax burden down to 4%, which is fantastic. It's wonderful. But I would say even more, sort of important, at least what I've discovered, is once I got here, this is a hotbed of entrepreneurs. So everywhere I look in my network, I have people that own like medical practices. They're in cryptocurrency. One of my friends has the largest Bitcoin fund in the world. Another guy was a founder of Ethereum. There are people that own large roofing companies. There are people that own, medical like vein clinics. A friend of mine owns 180 vein clinics across the United States. And so you get this phenomenal group of successful entrepreneurs that are all looking to do deals, because we're all pretty much in an age where we're still busy, still making the money. That's why you'd move here. And the deal making is just incredible. I'll just tell you an interesting story. A couple of months back, a friend of mine comes up who was a developer by trade, but he found this deal where some guys who had developed a hamburger machine, and you're going to want one of these, I promise you. I wanted one in my kitchen. So it's a normal vending machine, like on a 3x4 piece of real estate, meaning it sits on a 3x4 piece of inside of a property. And you can push a button and it cooks up to 2 hamburgers in 4 minutes and dispenses them out of the bottom with a fresh hamburger with like the tomatoes, the ketchup, and all that stuff. And a couple of buddies went up to like taste test this thing and said, it's fantastic. You just push the button and 4 minutes later, 1 or 2 hamburgers come out. And so these were like some engineers that had built it, had no idea how to market it or do anything like that. And so my friend he was like, I want to invest, we can invest. So like 5 months later, he ends up selling it to McDonald's. This is like not my deal. I wish I had been on it. I was like, I don't know, it's cool, but not for me. I just want one. And things like that come up here was these crazy entrepreneurial deals. And you can get in on them because you're here. That's all. It's not anything more complex than that. Like you're here, you're at a party, you're at a barbecue, you're at our football tailgate, and there you go. Some opportunity comes up. And it's also you ever use like Miracle Grow when you grow houseplants?
Mm-hmm.
The ideas around here are like Miracle Grow for your brain because there's so much going on. And that to me is the most fun. And I love, reducing my tax burden, of course, but that turns out the secondary benefits even better. Just like a fun group of people to hang out, people that understand me. I'm an entrepreneur, and for all of us here, you're all entrepreneurs, and that like your brother-in-law really doesn't understand you. He's like, "Oh, you're going to go broke. You better be careful," or whoever in your family's like that.
That's a fantastic network. That's what a great lifestyle to have those people around you. Bob, tell our listeners how they can find out more about you, get in touch with you. How would you like them to follow up?
Couple things. You can go to bobdiamond.com. I have a page there. It tells a little bit about me and about this overages thing that I do. There's a YouTube channel that I have. That's a Bob Diamond YouTube channel. There, I go over all kinds of real estate related things. Like we talked about today, what do you do today? It's repositioning plays and working with the foreclosures that are out there. And, I'm really just trying to provide value. I do fine with what I do. I don't need to do an extra deal. My goal here at this stage of my career is to help people that are just trying to put something together, trying to make their business run better, trying to optimize, and sort of passing on the good advice I've received over the years, the benefit of my experience, and just help you forward. Because as entrepreneurs, we have our own way of thinking, and you can't really learn it in a school. You're not going to go to some college and learn it. You're not going to go to some MBA program and learn it. So as entrepreneurs, we need to help one another. And I have great technical knowledge, lots of real estate experience, lots of law experience. I guess it's coming up 30 years now because I became licensed in 1995. So I guess it's 30 years. Love to share that with your listeners and just help you out. You don't have to buy a single thing from me. It doesn't matter to me, but I'd like to help you avoid mistakes and help you identify where the opportunities are today and go get it. And it's such a rich time. The other thing's really interesting to me, Brian. I do business coaching for Harvard Business School, which I consider a great honor. I coach their entrepreneurs and help them with their businesses. And that's really fun. I get to attend the classes, which is awesome. All of them, to a person, are just headed, head first into AI. And that's all they're doing. Like we have 90 different businesses that are getting started, and like 89 of them are AI. And someone else is calling themselves AI, even though they're not. But what's interesting about that is for us in the real estate business, the young people are not plowing in and competing. So it's really reducing the competition because where people see the opportunity is in AI. I don't blame them. For a young person who's in their 20s, that probably is exactly what they should be doing. But for us older folks, and I'll just say for me, older folk, and not you necessarily, but for me, I'm not going to go learn AI or like spin up an AI product. What I'm going to do is do what I know how to do, which is a physical, tangible thing, which is real estate, and just know there are less people trying to do it, which is really fantastic. And it's an interesting spot. I did one of their classes yesterday, and it was like everything that's being asked about is AI here, everything. And I've been doing this coaching for a couple of years, and it was never like this before. And I'm like, wow, this is a good opportunity for us in the real estate space to sort of operate quietly with less competition, which is always good.
Well, speaking of AI, are you using AI and how are you using it?
I am. And I would just say we're not probably optimizing it. I mean, ChatGPT has become my go-to. Instead of Google searching, I ChatGPT search things. I plan some vacations. It really is full of cool stuff. One thing I would tell you though, as a lawyer, please don't use it for legal advice. Every time someone does that, it comes up with completely wrong legal advice. So I wouldn't use it for that because it like makes up citations, it makes stuff up, it mishmashes stuff together. It's like having a first-year law student trying to litigate a case for you. It's just a mess. So please don't do that because it's not helpful. It actually is hurtful to you. And I'm not saying that because I want more business. I don't even take private law clients, but It's not there yet. Maybe it'll be there in a couple of years, but it's not there now. So I wouldn't waste my time with it. But as far as like, I would make that my default go-to search. The other thing that's happening, this is what I'm saying with the Harvard students, they're all trying to figure out how to make specialized AI for specific things. Like they were talking yesterday, someone's trying to make an AI to replace Salesforce. And they're like, we think that with AI, like a company could program a custom CRM in a matter of days to completely replace Salesforce. And Salesforce is worried about it. They're like, man, people could just use, one of the coding tools out there and do it. And I think what we're going to see from a business perspective is a whole bunch of people making specialized like apps, basically, to do things like, for example, skip tracing, which is something you may do as a real estate investor, where you see an empty house and you want to get in touch with the owner to see if they want to sell. AI skip tracing is already here. And you're not trying to get ChatGPT to perform that. Instead, you have a specialized AI-based skip tracing. And it makes it easy. You just give it what you want, essentially, and it runs around going and doing it. And I think that's what we're going to see, a whole bunch of specialized tools and things like figuring out the renovation cost more accurately than people generally do, skip tracing, finding loans. I have another friend of mine that built a loan underwriting platform on AI. And what the benefits of it are is that it looks at more programs and can actually do the underwriting in minutes that would normally take a week or two, at least. And I think as business owners and entrepreneurs, we're just going to see specialized tools that do a lot for us. And I think that's great. And I think that's where our growth is going to be and where our lives are going to be made easier. And you think about things that computers have made easier. I'll just give you one example, banking. If I want to transfer money in the bank now, I literally pick up my phone and I push a couple buttons. I can send money to someone else through like the Zelle platform or PayPal or Venmo. I can pay contractors. I can transfer money in between my bank accounts on the bank's app, literally in like a minute or two. Used to be a pain. Like I used to have to run to my job sites on Fridays and like pay everybody. Now I don't. Now I just go on PayPal and I just push the button and it's done like 30 seconds later. And it's made our lives more efficient. So we don't have to waste time on that, non-income generating activities. And that I think is where our future is. And it'll just make us more efficient because you make money in real estate by striking deals, meaning finding a seller that's willing to sell at a price that makes sense for you. That's where your money is actually either made or you're in a losing situation. And that's, we need to focus on that as real estate investors. We don't need to focus on, I have to run down to the job site and be busy paying everybody and feeling good about it. You're not making money with that. So,
well, Bob, thanks so much for being on the show today and sharing your experiences and your creative tips. I mean, I really enjoyed learning your perspective on overages, some foreclosure creative strategies, the fact that you live in Puerto Rico and save all that money on federal income tax. What a great way to go. And even your insight on AI too. I really appreciate this conversation. Thanks so much for having it with us.
Thanks for having me. And I really appreciate it. And hopefully some people got some benefit out of this. And that's my hope for everybody listening.
I want to thank everybody for listening to this episode. I'm your host, Brian Hamrick from Hamrick Investment Group. And you can find out more about me by going to higinvestor.com. That's higinvestor.com. This episode was sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB and Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com.
You've been listening to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association. You can find out more at rpoaonline.org. If you enjoyed this podcast, please go to iTunes to subscribe, rate, and review.